Welcome to Fed Watching for the third full week in November. And we had a shortened week because of the Thanksgiving holiday, only 3.5 days, but let's get into the market recap anyway. It's Monday, November 19th, and market's down again. It feels like every Monday they seem to start down. They're off about 1.5% across the board, led by tech stocks. The NASDAQ was down 3%. I'd like to take this moment to remind everybody that the Dow is at just about 25,000. The Dow didn't cross 20,000 until 2017. So Trump was just about to be sworn in the first time we could cross 20,000, and we're up 25% since then. Going back down through 25,000, no big deal. It's still been a great 12 months, even if you're looking at stock market returns, although most of that came over the 11th and 12th months ago at this point. But not that big of a deal, and moving 1.5% on maybe trade talks, maybe tech numbers coming in weak is not a surprise. It's Tuesday and the market is weak again, down almost 2%, but it could be worse. You could be in Bitcoin. Bitcoin is down about a third over the last week. It's Wednesday, and investors get a little something to be thankful for going into Turkey Day tomorrow when markets will be closed. Oh, hey guys, what are you doing here? It's Thanksgiving. Market's closed. But as long as you're here, I'll give you a little reminder. Chess championship tied up after 10 games, 5 apiece. So next person to win a game is probably going to take it home. Only 2 games left. It's Friday, and market rounded things out this week with another little down day on the short trading day. Bitcoin also getting crushed. I'll pull up a Bitcoin chart, both of the last few weeks and then longer term on the market review later. But man, just getting killed in crypto. And then Microsoft is actually the biggest stock by market cap right now. So eat your heart out, Fangs. A little comeback, a little Satya Nadella magic, and all of a sudden Microsoft is the biggest company in town again. So as you saw, stocks down across the board this week. Although diversified investors got a little bit of a break if you had international or smaller cap stuff. You weren't as bad off. S&P 500 just got crushed, and bonds obviously did okay. Yields dropped a little bit. Not that weird of a week, although a little piece of market trivia was floating around that said, I can't remember who said this, I'm not positive it's right, but this week and 2011 were the only years in the last 50 years where the market was down every day of Thanksgiving week. So a little nugget there for you. But just a down week, just a bad week. Not much to it. 3.5 bad days. And could we have seen this coming? Let's go to the past and ask ourselves. I actually had somebody on Wednesday ask me if I thought the market could go down another 1,000 points from here. And I said the S&P 500 or the Dow. He said the Dow, and I said, of course the Dow could go down 1,000 points from here. It's just 4%. So as I said, obviously you can go down another 1,000 points from here. It's still true. Stocks were not nearly the worst hit thing that we saw this week. Oh, there was worse. So my brave crypto loving friends, I give you the chart for Bitcoin for the month of November. Started at about 6,400 and it's down about 40% since then, down to 3,900, which to be fair is still much higher than it had been even just a few years ago. But man, has it been terrible. But basically since last Thanksgiving, when everyone was talking about it, it's gone nowhere but down. Let's see what it did over the last year. As you can see in the 2 minutes that it took me to update my graph, that Bitcoin fell by about $10. And by the way, if you notice the little technical analysis going on the right hand side there, I don't endorse that. It's from ccn.com, who, to their credit, have the best looking graphs of Bitcoin that I could find. But I have no idea whether they're a legit site as far as place to buy your crypto, or I don't know if they run an exchange or anything like that. But you can see the 1 year, you can see right around the holidays, we had our big crypto craze, and it was $10,000 right around a year ago, and peaked, and then right around the second peak was when people were able to go short crypto via options, futures, things like that. And man, ever since it's been a one-way slide downhill. One last Bitcoin point I'd like to make. It looks to me like it crossed $1,000 for the first time right at the beginning of 2017. And so if you said, hey, Bitcoin is a bubble at the beginning of 2017, you were wrong. Or at least it going down right now does not prove that you were right. It is still many, many times higher than it was even just a couple of years ago, 20, 23 months ago. So people that have been saying it's a bubble over the last couple of years still have a long ways to go to prove that's true. I mean, it would really have to come down into the hundreds, I think, for most people's predictions to have borne out if they were crypto bears. But man, is this thing volatile. Moving over to the economy, home builders index came in at 60, which is still a pretty strong number, but a lot weaker than 68 where we were. So still good, but not as good as it had been. Housing starts, another number people like to look at, see how people are feeling, right where expected, which is a pretty good place. Jobless claims are creeping up, but still record lows. I mean, we're just thousands away from record. Durable good orders were a little weaker than expected, but still pretty decent in the scheme of things. Existing home sales were up, and consumer sentiment was still very strong, although slightly down. So again, kind of a mixed week of economic indicators. Not a whole lot in it because they're still all pretty strong. There's been a lot of talk about, and Trump kind of brought this on himself, but how much he doesn't think the Fed should have raised rates, and he's been getting a lot of very deserved flack for talking about what he wants the Fed to do. He should leave the Fed alone. He's very sour grapes about who he appointed, at least today. He's mad at his Secretary of the Treasury for convincing him to appoint Jay Powell, who's done, I think, just a great job. Although, if we were looking in hindsight, I think the Fed actually would have raised rates a little bit more slowly. They thought that there was a little bit less room to run for the economy, the unemployment rate, than it turns out there was. So Trump is 100% Monday morning quarterbacking everything, and he seems to think that the stock market should only go in one direction if he's the president, which obviously isn't the way things work. Last, because I know all of you want an update, World Chess Championship is down to its very last game, which is going to be played on Monday. We're all tied up. Magnus Carlsen and the American Fabiano Caruana, 5.5 games apiece. If this game is a tie, then they will go to tiebreakers, which is a series of faster, more exciting, action-packed games. But keep an eye out for that last game on Monday. And if Fabi wins, then an American is the world champion. Thanks for tuning into this episode of Fed Watching. I hope you enjoyed.